Zimbabwe abandoned its own monetary unit in 2009 and has been trading in multiple currencies since. In response to growing volumes of trade with other countries, the central bank has introduced more currencies to the mix.
In that regard, in addition to opening of accounts denominated in Botswana Pula, British Sterling, South African Rand, US dollar, individuals and corporates can also open accounts denominated in the Australian dollar, Chinese Yuan, Indian Rupee, and the Japanese Yen.
Analysts are still digesting the move, but some point out that bringing in more currencies could create problems when it comes to determining cross rates for exchange. Meanwhile, bankers breathed a collective sigh of relief after a deadline requiring them to raise their capital thresholds fourfold was pushed back. Last year, the central bank set June 2014 as a deadline for all commercial banks to increase their capital adequacy levels from the current $25 million to $100 million. Banks now have until the year 2020. A number of local banks had been struggling to find the required capital and faced the prospect of merging or being forced to shut shop. The move and other changes to the banking laws have been welcomed.
Reducing it to 25 million creates more opportunities for banks to actually continue in that industry. So that is a good measure. The other important thing is the issue that to make sure that the loan books of the bank, as you know, in the industry, there's been a lot of bad loans given to friends and insiders and whatever. And we are going to see more transparency in that bank directors cannot borrow directly from their banks. They have to go outside their banks to borrow money, which is very good.
The Reserve Bank also wants to see more electronic transactions, which will help ease a crippling liquidity shortage. It also plans to encourage lending to SMEs, in particular small-scale gold miners. The monetary policy follows the national budget announced in December 2013, where the finance minister pledged to inject $150 million into the Reserve Bank.
For some time now, the central bank has not had the capacity to play its role fully in the financial sector, but a pledge by the government to recapitalize it has given it a fresh impetus to step in and come up with a policy that should start to slowly rebuild confidence in the financial sector. But as many people point out, this policy looks great on paper. The true test will come in its implementation going forward. Farai Mwakutuya, CCTV, Harare, Zimbabwe.